What's happening, guys? Welcome back to Dynamo DeFi. My name is Patrick, and on this channel I talk about cryptocurrency, decentralized finance, and economics. Welcome back to another Yield Farm Friday. Every Friday I look at some of the most exciting DeFi projects that allow you to earn yield on your cryptocurrency. Remember that many of these were submitted by viewers, so by covering them, I'm not necessarily endorsing them or saying that I'm investing in them myself. I'll simply try to give you my best analysis of the project and its risks that I can. So before we do that, I want to just address the market. Bitcoin had a major dump overnight. It was around 59,000, and then it just, in the span of a few hours, crashed down almost down to 53,000. And a lot of this came from things that didn't actually have to do with crypto. It had to do with lockdowns and flight bans around the world, and the entire stock market took a crash. So this is a good reminder that cryptocurrency is not isolated from larger macroeconomic trends. It's also a reminder that things can crash this quickly, right? A lot of us went to bed feeling pretty good, then we woke up and everything in our portfolio was down by 10 to 20%. And that's tough. If you've been in crypto for a while, you've seen that. Many of us saw things drop by 60% in May. If you're new to crypto, then welcome. This sort of thing does happen. If you're having a tough time of it, because you saw your investments go down a lot, then I'd recommend just take a step away from the computer, go for a walk. Everything's going to be okay. It's happened to all of us, and people survive. You're not alone in that. Also, just to give a couple more caveats before I jump into the video, I just want to remind people we're talking about a lot of very small, risky projects today, so never put money in that you can't afford to lose, especially when the market is risky like this. I mean, no one really knows what's going to happen. It could bounce. It could dump more. Anyone who thinks they know the future for sure is wrong. The other thing I want to say is that many of the ones we'll look at today are forks of Olympus DAO. And so whether they succeed will largely depend on how committed their communities are. So I'd strongly recommend that you scope out the community of a project and what they're about before you're investing. For this and for everything else, you also want to make sure that you're only investing in things that you'd be willing to hold through a dip. And I think this is a good reminder of that, right? It's easy to hold when something's going up, right? Because you're happy, you're telling your friends about it, you're looking at your portfolio and you're making all sorts of money, but you should try to only buy things that you'll be willing to hold through a dip, because otherwise what happens is it dips like this, you sell, and then maybe it bounces back at some point, and the market's gotten away from you because you didn't have confidence in your investments. So it's really important that you develop the confidence to be willing to hold. And on this channel, I do my best to provide education, but you should always do your own research, of which this video can be an important part. Doing your own research is especially important in risky investments like these. But that being said, what is life without a little risk? So today we're going to look at some degen microcap yield farms. Let's get into it. First one we have is Maximizer. Maximizer is a fork of Olympus on the Avalanche network. Now, some of you who are in Olympus forks on Avalanche may have been in Snowbank, which did a borderline rug pull yesterday. They had a project called Snowdog, which was a meme coin they made, and some sketchy things happened where a lot of people lost a lot of money and then lost confidence in Snowbank. But my point being that I think this sort of damaged a lot of the Olympus forks on Avalanche short term. But my thought is if that money sticks around, then it could be a good opportunity because it's going to flow somewhere. And Wonderland, of course, is one we love on this channel, but Maximizer is a smaller Olympus fork on AVAX, and from what I've seen, it seems to be pretty good as far as these sorts of things go. APY right now is 35,000%, decent. It doesn't seem to be audited yet, and they have plans for what to use the treasury for. They're planning to do protocol incubations, and they're planning to do that in Q2 of next year. I'd love to see them move this up, but I guess they're focusing on accepting Avalanche project tokens before then. Yeah, but that is Maximizer. Otherwise, it seems to be a pretty standard fork. Next up, we have Fort Knox DAO, and this one is on Fantom, and it actually has not launched yet. So they're branding themselves as the Federal Reserve of the Metaverse. And this one launches on either December 1st or 2nd. And that's not me forgetting. They said it'll either launch on December 1st or 2nd. So if you want to get in early, you'll have to pay attention. Here they are on Twitter, Fort Knox DAO. And some things they've highlighted, they have a doxed team. They have a multi-sig wallet with an external participant. No team allocation. I suppose that's good if true. I do wonder what's in it for them. That makes me nervous that somehow they've, have secretly included themselves. And I don't know that, but I don't know why you wouldn't include yourself, because no one would complain if you included yourself a bit. They have a vested pre-sale of $60,000, and they say that the DAO will be allocated to charity. I'd love to see that. Love to see more cryptocurrency in charity. And so what they're trying to do is pretty interesting. They're trying to build a decentralized reserve currency system with the goal of becoming the metaverse's Federal Reserve and DeFi bank. So basically they're trying to become sort of it's almost like a GameFi project. They're trying to become the kind of central banking system for all these different metaverses that are being created. And they say their long-term goal is to build a comprehensive metaverse DeFi platform with a wide range of goods and capabilities in both the actual world and the metaverse to become a global trade unit and a medium of exchange currency. So basically what I said a second ago, that they want to be the central bank and DeFi platform for the metaverse. Will they be able to do that? I don't know. But like I said last week, the time to get into these projects is right when they launch. So I would keep an eye out for this, and maybe you can get in right when it launches. Next one we have is Spartacus. So Spartacus is also on Fantom, and as far as I can tell, it's the premier Ohm fork on Fantom. A few things I want to call out about this one. First is their backing is almost at price, so it's trading at a very low premium to the price right now. The other thing I want to call out is they actually built a fork of Abracadabra called Spartacadabra.money. Perhaps not the most creative, but that is pretty interesting. I guess they're building it, I should say, because the app's not actually out yet. And they're also building something called Spartacus Pro. That's right over here, Spartacus Pro. And it's basically similar to the sort of thing that Olympus is doing, where they're trying to provide a service to allow protocols to own their own liquidity. And I would say my one concern with these things is that although it's quite ambitious, it does seem to be so far they're mostly copying what other projects are doing. I mean, right down to the name of Abracadabra, right? Spartacadabra, which I don't love that. I mean, if the team actually builds the app, that's phenomenal, but I'd love to see a little bit more uniqueness there. On the positive side, one thing I do like is that they have stated that they're using their treasury. How much is the treasury? Treasury, which is $88 billion. They're using the $88 million to farm on Curve and Geist. So they're earning some more yields for the treasury, and you can see it's been going up over time. And so this backing is just going to keep going up if they're doing that, particularly if they have a lot of DAI, which they do. So DAI was stablecoin, so it's not going to fluctuate with the market. That is Spartacadabra. Overall, I mean, like I said, probably the premier one on Fantom. My main concern is just that they seem to be sort of outright forking other projects, and I do wonder how long that can hold up if, for example, someone like Wonderland or Abracadabra itself, I mean, Abracadabra is on Fantom, but if they became fully cross-chain, whether they can compete. All right, next up we have an interesting one. This one is Atlas USV. So I'm covering this one because a lot of people were talking about it. Atlas is another fork of Olympus, and this one was founded by Tai Lopez. Some of you may be familiar with Tai Lopez. He is a large social media personality and YouTuber. He has a lot of ads that he likes to talk about reading and other ways of being successful. And yeah, it launched this week and it has a really high market cap of almost $1 billion. I'll talk about why in a second. The price has actually held up surprisingly well. I think a lot of people expected this to drop rapidly. The price has held up surprisingly well. However, for whatever reason, the backing is extraordinarily low. It's only $3 per token right now. I'm not actually sure why, because they do have a positive ROI if you're staking their LP and DAI, not on Frax, but on the other ones they do. So, I don't know why the backing is so low. But regardless, a couple of things I want to say about this. First is a lot of people are writing it off because it was started by Tai Lopez. I would just say that, regardless of what you think about him, he has been extremely successful in growing his social media brand and as well as his e-commerce companies. He actually, I believe, owns several well-known retail brands now because he was able to purchase it with some of his proceeds from investors and his e-commerce business. So he's a very successful person, has a history of creating multiple businesses and also of catching trends. So some people were like, top signal. Perhaps, I mean, the market did crash, but I wouldn't be so quick. I wouldn't be so quick to completely discount it just for that, right? Still look at the project for its merits. All right. So the next thing they have is, you've seen a lot of these projects like Olympus. They talk about 3-3, which is you're supposed to stake and then restake. They are saying that they're not just doing 3-3, they're doing 3-3-3. So the third component, and the third component is supposed to be how the protocol behaves. So saying the protocol pursues a value add strategy with its treasury so that the efforts of its users are compounded and amplified by the protocol's strategy. I think some other projects are doing this as well. It is nice that they are acknowledging that they're going to try to do that. I will say I looked through the documents. I'm not going to go through all the details. I wish they had some more information on exactly how they were planning on doing that, because right now it's a little bit, the details aren't fully there. The final thing I'll say is that their allocation here, so a pretty large proportion of it is going to the founders or advisors or marketing lockbox, et cetera, charity. That's great. They own 50% of the supply from the protocol, which they say is defense of, let's see, what exactly is that defense of? That is, they're never sold, and it becomes a smaller piece of the component. And that's because they're constantly, providing interest to other people, and basically they use it as a reserve in extreme circumstances. But the reason I want to call that out is because I think that's why the market cap is so high, is because a large portion of it is effectively not circulating. So that's why they can have a market cap of almost $1 billion. Final thing I'll say is the APR on this is not too high. It's 167%. Look how spoiled we are. We're used to 90,000%, but 167% is not too high for one of these forks. And I think they say their reasoning is to make that more sustainable. But if in this case, you'd be better off bonding or bartering, as they call it, because then you're going to get 20% in 5 days. All right, next, let's talk about Jade Protocol. A lot of people have been asking about this. Jade is made by the same people who made Smartcoin. Some of you might remember Smartcoin. It was this crazy project on Avalanche not too long ago. That had some really interesting features with the APY doubling, and Jade continues to be pretty shocking. 842 million % APY. That's what I like to see. And this is just a pure degenerate play. Again, don't put in what you're not willing to lose. But this one is crazy enough that it might just work. They have this trailer here that you can watch. A few things that I want to call out with this. They have a calculator here, which I think is pretty cool. And this ties into the fact that the team with Smartcoin sort of mastered their Ponzi-nomics, you might say. But so you can put in, for example, let's say I wanted to get 1 Jade, and let's say I did 5 Jade, because that's just over $1,000, so 1.1K. And then say, people can say, oh, well, what if I held this for a year? And you're not going to get this interest for a year, but they'd say, oh my God, I'd have $95 billion. Or what if I held it for 2 months, right? And you'd have hundreds of thousands of dollars. Again, probably not going to happen. But I think this is sort of interesting as a marketing ploy, because people are going to go on here, see this, and then their mind's gonna start to think of all the stuff they could buy, and they're gonna buy in. So this is kind of interesting. One other thing I just want to say is, because people were talking about this on social media, they say they have a Harvard professor on the team. I'm gonna let you guys in on a little secret, and I'm only saying this because it's relevant, because I don't like to advertise this, but I actually have an econ degree from Harvard, and I can tell you there's a little hack people there do where when they're creating a startup, they get a professor to sign on as a quote advisor, because it makes their project seem more legitimate. But unless they have some sort of explicit doxed professor kind of actively being involved, sort of like you have Emin, who's a professor at Cornell who founded Avalanche. Unless the professor is actively involved, I would read basically nothing into this. It's not bad, but it's not good either. Just want to call that out. Finally, I'll say that they did do a few other things that are different than other Olympus forks, and one of them is that 10% of the treasury is used for buyback and token burn, so that's good to see. And then the other thing is that they say our treasury will be spending 5% of its reserves to invoke Metcalfe's law and leverage an industry-leading marketing budget. Those are the two important words: marketing budget, invoke Metcalfe's law, and leverage an industry. They're just throwing out big words. Look up what Metcalfe's law is if you don't know. It has nothing to do with marketing. That's all I'm going to say about that. Final one we have today is not so much a DeFi protocol as a play-to-earn game, but it's a play-to-earn game that allows you to compound and earn some rewards. So sheepgamexyz.com, this launched a few days ago. It's a fork of something called Wolf Game that was on Ethereum, but this one's on AVAX, so the fees are cheaper. And basically, you can buy either a sheep or a wolf, and once you get the sheep, you can put them in here, and they generate something called a wool, which is a token. They generate 10,000 a day, each sheep, and then you can spend the a wool to mint another sheep, or you can sell it on the market. And let me switch to Avalanche Network so you guys can see some of these things. So right now it costs 40,000 AWOL. Previously it cost 20,000. And when you mint it, you have a 10% chance of getting a wolf instead. And I'll explain what the wolves do in a second. And you also have a 10% chance of the sheep being stolen, meaning that you spend this and poof, disappears. So it's kind of an interesting game. Right now, the sheep cost, if you were to buy one on like NFT trade, then they cost about 5 or 6 AVAX, and the amount of AWOL they generate is about 1.2 AVAX a day. So it's roughly 20% return every day, which is pretty nice. And one sheep would take 4 days to generate enough AWOL to create another one, assuming this, unless this thing got up to 80,000 by then it would take 8 days. But the other interesting thing is that once you stake them, you cannot unstake it unless you let them accumulate 2 days worth of AWOL, so 20,000. So that gives a very strong incentive for people to keep staking it. And I think right now, something like 97% of the sheep are staked, which in theory should drive the value of sheep up. So kind of a fun game. I've been in this for a couple days, and I got in at mint. I was lucky, and it's pretty cool. Like I said, each of these is generating like 1 to 2 AVAX of AWOL a day, and I've honestly just been selling it because I don't want the risk of my sheep getting stolen. Oh, and by the way, if you do get a wolf, those are much more expensive. But if you do get a wolf, what happens is whenever you shear your sheep, so whenever you shear the AWOL, 20% of that, there's a 20% tax, and that tax gets distributed to all the wolves. And then plus when you mint the sheep, like I said, there's a 10% chance it gets stolen, and when it gets stolen, that gets distributed to one of the wolves, and they have some probability ranking based on how alpha the wolf is. So the main thing I'd say with this is I would keep an eye out for games like this because they seem to be attracting a lot of attention, and I think there already are a lot of forks that are in the works, so keep an eye out. I'll try to cover any upcoming forks that I find. The other thing I'll say is, we love DeFi on this channel, but play to earn is also a form of generating yield, and sometimes you just got to roll with the narrative. And I think metaverse play to earn is a very strong narrative right now. So I will be covering some projects like this in the future. That's all I got for today. Those are the projects. Let me know what you guys think about these. Are you going to choose to invest in any of these yourself? Do you know any more play to earn games like Sheep Game XYZ that you'd like me to cover on this channel? Have a great weekend. If your portfolio is down, take a breath. And until next time, this is Dynamo DeFi.